So, as of today, Grab has officially passed Medical Properties Trust to be the number 2 position in my value portfolio. Now, Grab has been one of my best buys of this year, up 46% year to date, and they've been just absolutely ripping and tearing after a pretty outstanding Q3 earnings report. So I listened to the conference call and was looking at the presentation, and some of the highlights were 17% revenue growth year over year, in line with guidance, 20% in constant currency. So because they report in US dollars, they lost a little bit due to the fluctuations in currencies. There was GMV, which is another one of the metrics that they self-report as an important KPI, 15% year over year. 18% constant currency, adjusted EBITDA 90 million, with profit of 15 million. I think the profit there is actually GAAP net income. So they did have, I believe, EPS of basically 1 cent per share. So there was, I think, positive net income this quarter. And this is, of course, the creme de la creme here. The trailing 12 months adjusted free cash flow 76 million, which is 348 million higher than the previous trailing 12 months. Now, Grab is not just the Uber of Southeast Asia, but it's also potentially the SoFi of Southeast Asia. They have a financial services and digital banking segment, and the funds on deposit over the last 12 months have basically tripled, with over $1 billion now deposited and on their digital banking platform. One thing I always harp on when it comes to Grab is how much I am a fan of their balance sheet. As you can see, 6.1 billion in cash liquidity, less loans and borrowings of about 300 million, so almost a rounding error, really, compared to how much they have, leaving a net cash liquidity of 5.8 billion. However, I also learned on the conference call that they do count the funds they have on deposit in the online banks as part of this cash liquidity, and we just talked about the fact that was about $1 billion. So I'd like to also just personally, I don't really count that because technically speaking, that's money that they have to give back to those customers if they make withdrawals. So I consider their actual net cash position to be about 4.8 billion, give or take. Another important aspect of this business is, of course, their adjusted free cash flow. But not only the number itself, but understanding how they arrive at the number. Because, of course, what you hear in a lot of circles is that adjusted anything is BS and all of that. So I think if you believe that the reconciliation, as in what numbers they're adding or subtracting in for the adjustment, if those make sense to you, I think it is fair to emphasize these numbers. So you have, your cash from operations at the top, just like you regularly would, less your capital expenditures. Okay, that makes sense. Which gives you your top line free cash flow. Now, this number would end up being a lot higher if they just left it as is. However, what they do then is they add in loan receivables from financial services, but then also subtract deposits from online banking, because those deposits would artificially inflate how much cash it looks like is coming in. Because again, the cash coming in, those are deposits that they actually then owe back to those customers if they want to make a withdrawal. So that's not really like income that is just the same as if they were receiving that for a good or a service, right? So it makes sense to take that out, which leaves you with 137 million in adjusted free cash flow for the quarter, which is still, when you look at the comparable quarter from 2023, is a huge gain. Okay, this is the highest they've ever had, and if it keeps growing for just a little while longer at this pace, it's going to be just chef's kiss, wonderful for shareholders. Speaking of things that are chef's kiss wonderful, how about that 8.1% bonus APY for the first 3 months on Moomoo when you sign up using my exclusive link below? If you're like me and you like to keep a little bit of uninvested cash parked on the sidelines to await that perfect opportunity when it comes up on a stock you want, why not put it somewhere that's going to give you a little bit of extra juice for your squeeze? And by the way, there's no monthly fees or anything to join. Just use my exclusive link in the description below and deposit your cash. Sign up for that cash sweep account, and you get that bonus APY for that first 3 months while you wait for that perfect opportunity. So the analysts have a love affair with Grab, and I can tell why. I mean, when you listen to their Q3 webcast conference call, they spent like 2 or 3 minutes on the prepared remarks and then a solid 45 minutes on just Q&A with the analysts. And it seems like they don't really dodge anything or hide anything. They're pretty good about fielding those analyst questions and giving you answers that you can actually sink your teeth into. And it's also no surprise that after this banger of a quarter and the price action that is matched, that analysts have inched their price targets up in a lot of cases, still showing a consensus of strong buy, even at these prices that are up 40% plus year to date. Personally, I really like conference calls where the analysts are asking some questions that maybe reflect some questions that we at home as investors may have had, and actually getting real answers from management here. So I definitely respect what they're doing. And this is one of those cases where I actually kind of agree with the fact that the analysts consider this to be a strong stock that has a bright future. Now, as far as like which exact number over the next 12 months, I won't go as far as to say that they're necessarily right on any of those. That's just more speculation than anything else. But I agree that it's a good company with a strong future. One more aspect I kind of like to look at in companies like this, because they could be posting these great free cash flow results, but offsetting it with excessive stock-based compensation. Now, they did lean into it a little bit harder. It looks like in the 2021 through the earlier part of 2022, where, let's face it, cash was probably tight. The lockdowns were probably hurting to a certain extent some of their business. Probably tourism was down, right? And tourism is a big part of their business model. So that was definitely hurting. But now it looks like stock-based compensation overall is trending down 53 million in this last quarter, while free cash flow is up. So this is what I want to see. And they do have a buyback program, but it's pretty modest, 500 million total. They've barely deployed any of it. So I wouldn't necessarily expect a huge amount of buybacks yet, because they want to fund growth organically without taking on debt and while keeping a pretty bullish cash reserve. So they're probably going to try to organically fund growth with their cash flow. So I wouldn't lean too heavily into the idea of massive buybacks at this stage in the company. I would be more happy for them to fund organic growth while just maybe cutting down stock-based compensation slowly and keeping it at a very reasonable level. If you watched the video in the entirety, I want to thank you very much and remind you that you should subscribe if you are not subscribed already. Like the video for the algorithm. Comment below if you're in on this grab journey with me. This is one of those cases where, in spite of the stock being up a lot this year, I don't think it's necessarily too late to capture some of that forward value. Also, if you're not in the Discord, you should definitely consider joining the Discord. We have a couple hundred pretty smart investors in there, and we always like to bounce ideas off each other. Make sure that you're following me on the X platform at Mr. Macho Mog, link in the description there as well. And of course, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, link in the description. And if you want to support the channel further, you can either become a member or you can always sign up to the sponsor, which is also linked in the description. Have a wonderful day, everybody. Take it easy.